Investment committee meetings are a great place for plan sponsors to discuss the latest trends in defined contribution plans, from investments to plan design to communications and education. But one area that we know that plan sponsors focus on is fees. And joining me now is Cammack Retirement Group consultant, Jennifer Stevens. Jen, thanks for joining us on the show today. Can you talk a little bit about the general concepts that you raise when you're talking about fairness, equality? Does it involve the fixed fee? Does it involve, fee levelization, concepts like that?
Yeah, we've been actually talking a lot about fee levelization lately. It can be called a couple of different things: fund revenue equalization, fee equalization. It's all the same thing. What it means is taking whatever revenue share is part of an investment option already and bringing it up or down to whatever the record keeper's required revenue is. So probably easier with an example. If you have a record keeper, you have a plan, and the record keeper says, we need 20 basis points. That's our required revenue. That's the cost to run the plan as a record keeper. Somebody who's invested in a fund that pays maybe 10 basis points of revenue share will actually see a debit, if you go with the fee equalization, will actually see a debit for those assets that they're invested there of 10 basis points to bring them up to that 20. Conversely, if you're somebody who's invested in a fund that has maybe 25 basis points, they'll actually see a credit of 5 basis points to bring them down to the 20 basis point required revenue. It is more equitable, and it is a conversation that we're hearing a lot about, and plan sponsors are asking about it, and it's becoming more popular. I just had a client actually go through this two weeks ago. They went live, and there's not a whole lot of barriers to it. It's very easy. You tell the record keeper to do it. The record keeper gives you documentation. Plan sponsor signs off on it, and then they look over some communications and okay the communications. It's that simple. Something to keep in mind is that most record keepers offer some form of this. However, in order to do a true fee levelization, you need to have daily calculations. Not all record keepers can do daily. Sometimes they do monthly, sometimes they do quarterly, but that's a conversation that you'd have in the investment committee. Is it worth it and more equitable, even if it is monthly or quarterly? And that's, that kind of varies committee to committee.
When is the best time to have this conversation? I mean, certainly you're going into meetings on a quarterly basis, presumably with a client, talking about best practices. Is it to do during a fee benchmarking analysis and study, or is it when you do the RFP? The rule of thumb is to do an RFP, a request for proposal, every 3 to 5 years to kind of get the lay of the land, so to speak, in terms of fees. Is it in that RFP that's the best time to consider alternative fee structures like levelization and capabilities?
I don't know that I would say it's the best time. Yes, I think you should be doing it at all times. The RFP is an obvious time it's very relevant. You're going through your vendor search, you're looking through all of the things that they're offering you, and one of the things that might be coming up is, can we make this more equitable? In between years, on those off years when you're not doing an RFP, it makes sense to also be talking about it. These are things that, as a fiduciary, you should be thinking about. What are your participants paying? Is it fair? And how do you feel as a fiduciary about how it should be executed? And it's not a quick conversation. It is something that it kind of evolves over time. But those conversations, whether it be in an RFP or in those in-between years when we're just doing sort of a check-in on an annual basis, it sparks the conversation, and it's a good one to have.
I would imagine that there are some barriers to fee levelization, and wondering if you could talk a little bit about what you see as some of the barriers, both from the plan sponsor and the record keeper side. Yeah,
so I sort of mentioned a few. On the record keeper side, it really is just whether or not they can provide the service. Like I said, some of them are a little bit closer to being a true fee levelization than others, but most of them can offer some form of fee levelization. As a plan sponsor, the conversation is kind of difficult because although it might be more equitable for your participants, they're going to start seeing on their statement a negative sign, some of them. So that's something that they have to consider. And while it might be good in the end, it is more equitable and they can justify it, they're a lot of times concerned about the backlash and that type of thing. Otherwise, very, very limited barriers. It's really an easy process to implement. But that conversation is hard with plan sponsors. I will tell you though, we've gone through it with a couple of our clients and largely heard nothing, actually. And I think that kind of is the way it goes with a lot of these plan changes. There's a lot of hype about it. You're concerned. You think that your participants are going to freak out. and they really take it in stride.
Yeah, I mean, I think the belief is that by many participants and even some plan sponsors that administration's free, and we know that there is no free lunch. But I mean, if you bring up some really important points about engaging the participants and making sure that there's a lack of disruption, and it's very similar, I would think, to the crediting rate discussion. So if you're moving to an investment like a general account or a stable value fixed fund that has a lower crediting rate or a lower floor, that's potential disruption because people can say, okay, participants are very myopic. They focus on crediting rate and they focus on fees and what they see on their statements. I would imagine that it's a similar conversation and one that it just takes time to kind of walk through with the plan sponsor.
Yeah, exactly. It's always just a process. You have to get on board and you have to get your participants on board.
Jen Stevens, thanks so much for joining us.
Thank you.